This graph tracks the percentage of U.S. tax returns audited. From 2010 to 2021, severe understaffing caused that number to plummet continuously. The odds of an audit dropped so low that many developed a strong sense of security against enforcement. That trajectory shifted in 2022. Congress passed the Inflation Reduction Act, which injected roughly $60 billion into the agency's budget, specifically to close the gap in uncollected revenue. At the time, the widespread assumption was that this massive influx of cash would be used to hire tens of thousands of new human enforcement agents to manually comb through returns. Instead, a significant portion of that funding was channeled into advanced data analytics. The IRS launched a pilot program utilizing an artificial intelligence tool developed by Palantir, known as the Selection and Analytic Platform, or SNAP. Instead of a weary revenue agent pulling a file from a stack, millions of returns are now fed directly into this automated system. The machine evaluates taxpayer data instantly, without the constraints of human fatigue or limited working hours. Hoping that a bureaucrat simply overlooks your paperwork is no longer a reliable strategy. Your returns are now being evaluated by a tireless algorithm. This block diagram represents the tax gap, the estimated $696 billion in taxes that are owed but remain unpaid every single year. The visual scale here shows exactly why the agency is deploying automation. Traditional human recovery efforts capture only a fraction of that missing money. The AI first ingests your standard 1040 income tax return to establish a digital baseline of your earnings. It then pulls up previous filings, stacking historical data against your current return to map financial patterns and detect any sudden, unexplained drops in income. The intake process extends well beyond government forms. The IRS purchases data about you from third-party information brokers and scans public social media accounts. If you claim a modest income but post photos of yourself playing high-paying concerts every weekend, the machine cross-references that lifestyle against your stated earnings. By combining your submitted forms, historical patterns, and external data streams, the algorithm constructs a 360-degree financial profile. Underreporting income becomes an obvious mathematical discrepancy. Once compiled, the AI pushes every profile through risk filtering, funneling information through specific statistical criteria designed to catch anomalies. This curve illustrates audit risk across incomes. The far left spikes, targeting earners under $25,000 due to tax credit fraud. For middle-class incomes under $100,000, risk collapses to 0.5%. But past the $500,000 threshold, the curve aggressively spikes for high-net-worth returns. Breaking down risk by business structure reveals gig workers filing a Schedule C face the highest audit rate at 2.4%. By contrast, S corporations and partnerships carry a virtually non-existent 0.002% audit rate, making them statistically ignored by the filtering system. Beyond your income level and entity type, the filters automatically trigger if you make basic math errors or claim deductions, like travel or vehicle expenses, that are unusually high compared to peer averages in your exact bracket. Being selected for an audit is no longer a random draw. If your data hits these specific statistical triggers, the system flags you automatically. This flowchart illustrates the final step of the automated pipeline. Your tax return goes into the AI, the analysis applies the risk filters, and if you trigger an anomaly, the system assigns you a red risk score. That score is handed off to a human agent who executes the audit the machine recommended. Currently, the IRS closes about 505,000 audits a year, but the integration of the Palantir Snap tool is a pilot program, laying the digital infrastructure to aggressively scale up that enforcement volume over the next decade. Defending against an automated system requires precise compliance. Taxpayers must report 100% of their income and maintain meticulous documentation for every deduction to avoid tripping the anomaly detectors. There are also structural defenses. Consulting a professional about transitioning a vulnerable sole proprietorship into an S corporation or a partnership can legally move your business out of the AI's highest risk filter categories. When voters successfully pushed back against the mass hiring of new human auditors, the agency adapted. Those agents were replaced by an unblinking, algorithmic enforcer, making proactive tax planning your only reliable defense.